I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So green hours around the world this morning, despite concerns about Syria after news that any military action would have to wait until UN inspectors leave on Saturday. So that's providing us some short-term relief for now. What do you think the implication is for trading then today?
Well, I think that people are not as worried that they could be at their desk in positions and then all of a sudden headlines hit that, missiles have been launched, blah, 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 how's the market going to react? So I think the news that, until the UN inspectors leave, which I think are now on Saturday, open the door for a Thursday, Friday type of relief move that actually started yesterday. We came in yesterday. If you remember, you're like, okay, for those who actually sold correctly, who looked at the sell signals to reduce risk, what are some signals to then come in and tactically buy? Right. Guess what we saw yesterday?
We saw that move.
Okay, red dog reversal. So there you go. And you take a look at the spiders real quick just to look at the patterns. Again, this is the trend that's been in since November. Some people draw it a little differently and think on this, the spiders were already below it, but I think we're kind of right there. You look at this head and shoulders top, which was your sell signal, then a little bit closer right there. I might as well magnify it, which was another, type of red dog reversal the other way. It's almost like you could flip them. Here is when we had this 3-day bounce and we went through 166.83, came back below. That was your sell signal. So same way. So if you sold here, you had the luxury of looking for a tactical buy here. Early in the morning, we briefly went through 163.21, put a low in at 163.05. So what is that, 16 cents? Wound up hitting a high yesterday of, I do believe, 164.49, so about $1.30. And if you're an active intermediate trader at your desk, that's decent money. Okay, now the question is, we're opening up a little bit, kind of perhaps trade through this little pivot and fill a portion of this gap versus if you look over here, this gap proved to be very big resistance. So overall, I think the jury's out on whether yesterday was the, the low of this August, September move. But if you are, again, working and trying to make a living and you have to be in your desk, you're not away in the mountains, on the beaches, or, in a foreign land, it was something to do across the board. You could have used the same tactic in most sectors and a lot of individual names.
Well, it's interesting. I've seen some reports now that have speculated that if we find out that military action could be limited, that we could see a rally. And that's going back to compare to when stocks fell ahead of military intervention in Iraq and Libya, how stocks fell then, but then all losses they retraced within 2 months afterwards.
Well, if you think about it, because we talk about time frames, we talk about macro, intermediate, active. So in the last decade, even when I broaden that out besides military, the financial crisis of 2008, September 11th of 2001, if you would have just continued to stay the course, which could be a 401k or a 529 or whatever it is you do, monthly inflows, you wound up working through it. So if you're on a macro path and you plan to be there for the next 10, 20 years, this is not something that should derail you. If you're an intermediate trend trader looking for alpha, generating P&L, it's something a little bit different. But I think, on that note, even short term, like you said, so that's 2 months. The question is, what happens when the first missile strikes if you're in your seat? And I think just because of that news with the UN inspectors, they took that off the table until after the holiday weekend. So maybe Friday afternoon, volatility comes back.
Okay, well, being as speculation about a strike boosted oil prices on Wednesday, we did see some U.S. energy stocks get a lift, and names like U.S. Oil actually had continuation from its move on Tuesday.
Well, oil, which tracks, the USO, which is the ETF for oil. You look at this move here. We talked about this channel. It actually opened above it. This was a nice move that started right here during the summer. Okay, that ignited above in June, July. Here was some follow through based on what's going on there. If you look a little closer, I'm not sure exactly if this is an exhaustion type gap. Okay, when you gap up, no follow through, but it also has come a long way. So I think, for this oil move to continue, it should stay above this 38.45. But ultimately, oil has been in a nice trend. If you're trading oil at this point, in my humble opinion, I think the USO between 39 and 40 is a better sell than a buy.
What about Exxon? You've been trying to play a bounce in Exxon for quite a while. It did get a lift off yesterday. Pretty powerful move. Would you expect some continuation today?
I would, and this shows you that, again, entries and exits matter because the stock's been down 24 days in a row, so to speak. And then, I know for myself, I did not have it going into yesterday, and guys on the desk were like, hey, you want to try Exxon again? I'm like, no way. I got stopped out of that 3 different times. But anyway, yesterday wound up being the day, so you have to go back to it. Anyway, if you did sell Exxon when you had this little head and shoulders area around 93, you had the capabilities of buying it back here. Even if you didn't do it there, you had this middle level flag that it wound up breaking below that continued, to the downside. So with that said, here is your potent day, potent enough to, I think, warrant continuation. I think today might be, a little, not as obviously big as yesterday because it has to digest this move, but ultimately, I could see a relief move back to 89 to 91 here, or actually I'll even say 90 to 90, right around up to this area, I would think this potent bar should lead to.
All right, and Chevron actually led the way yesterday and performed better than Exxon. What do you see here?
Well, this is one of the things you need to do as a trader. Chevron went first yesterday. It went first also because relatively speaking, it was stronger during this daily chart pattern. So to show you the difference in chart patterns, this actually held support going sideways for what has been 5-6 months. So it having a lower pivot with that oil move, it was sharp and fierce quicker. So with that said, it did clear this lower area. So if you saw this happen, you actually, if you're a trader, you know what I'm talking about. You had about 10 minutes to get an XOM before it decided to let loose. So when you trade groups, you watch something happen, there's always some other things you could potentially be doing. And Chevron, which is the leader, went first yesterday, and then XOM finally got its bounce.
And then we also had 2 names in the group showing leadership, EOG Resources and Schlumberger.
Yes, and these are a little different. These are more in the refining area, and they have been acting better. So first we'll go with Schlumberger, which is something that I go to from time to time that a lot of investors love to gravitate towards, and rightly so. Right now that you have a nice looking chart here. If you recall when it broke its downtrend, that took place right around there. Okay, and then you had another flag type pattern and it gapped up. Not much follow through there, but what was important is it's base now for almost 4 to 5 weeks. Held a big portion of the gap above the 8 and 21 day, where I think the S&P and a lot of the other groups are, well into the 1500. So this is giving you all the ingredients of leadership. Okay, so with that said, question is, can it take out 84 and make new highs on 2014? And according to this pattern, you could actually, some might even say, this is a pretty sloppy cup and handle pattern, where here's your, your cup, here's your upper handle. So above 84, that can give you a nice move into the 4th quarter. So I would stick with Schlumberger and EOG. Different pattern, also above the 8 and 21 day. Hasn't consolidated the way Schlumberger just did, but overall, this looks like 2013 highs are on its forecast, and all it's got to do is clear this 161.32.
All right, coming up, we're going to go in the trenches with some tech names that held up well yesterday. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Some of the go-to tech names were among the first to buy yesterday, including Netflix, which continued to show relative strength and is almost at 2013 highs.
Yes, this one continues to be a go-to name and be one of the strongest stocks and the strongest trends in the market. You look here at the chart, learn this chart, learn how to follow trends. This trend has been intact for the majority of 2013, leading all the way up. It actually had nice trades along the way. This was a nice trade around 231, consolidated, broke higher again here, and this was probably what, above 265, and now it's flagging. So if you were short Netflix and Netflix traded above 289.94, ask yourself a question: how would you feel? Probably not good. So to me, I think 300 plus is coming to a theater near you.
All right. And Facebook, we talked yesterday about how it would need to hold its prior breakout, which it did. So is this on your radar for new highs as well?
Too. You know, during the last correction, it was one of the standouts. I talked about it with Deb on the street. Gave you a nice trade from like 38.50 through 90 through 39.30 up to 42. And then during this last 2-day correction, you know, what happened here? You had a down day to retest this 39.30. Now it's flagging again. Ultimately, this has been a great stock to go to since after earnings. You know, also you could have accumulated it as an investor going into earnings if you were able to take pain. So here you are. Here's this upper level. This starts, you know, to get above 41.20 again, and it can continue. I think I talked 44 by the end of the year with Deb, and it's well on its way, and you could actually trade in and out of it for cash flow or just sit tight and, you know, stay with it. It hasn't been below the 21 days since earnings.
And Apple, still acting well, held where it needed to yesterday as well.
Yes, and this one, you know, different than some of the other names. It's been just acting better since this lower range and since the last quarter's earnings, and times to be heavy, times to be light. You know, some got stopped out of it on the prior day at 498. If you did, you were able to look into it yesterday. If you want to take a quick look at this lower pattern here, this was your double bottom in Apple. This was your earnings gap, held 3 days, broke above this downtrend. That was really your A-plus setup right there. Then you also got another setup when it took back, you know, the 200 day. That's when Carl Icahn did his tweet. And then it didn't have enough energy to stay above there. So yesterday it held that area which we talked about, which was the 21-day moving average. And now the question is this, okay? What I want to see is I want to see it now hold this. Let's just expand this range, like kind of like what we did with Facebook that time. And now what would be good is if it could pop back up above 500, do some work here, and continue. But so far, so good. You know, we still have a lot of time between now and that event, and it seems as if people are trying to be glass half full versus half empty with this Apple versus, you know, last year at this time when it topped out on September 21st.
Right, this is true. All right.
My 40th birthday was the top of Apple.
Happy birthday. Nice present. How about Tesla, which opened higher but did fade into the close? Would you say this is just a case of it just needs some time, needs a breather?
Yes, I think it's just a case that it's been bucking the trend and it's at the top of its, you know, BB band, that's Bollinger Band. And if you look here, you know, you'll see that the trend here also unbelievable. It's been above the 21 days since that, you know, last quarter earnings. It was below it for a mere day, and that was a great setup for this Red Dog reversal here before consolidating again and continuing. Last time it touched the 21 day was at the bottom of, you know, that last little corrective activity. Here's where it went again. Nice breakout above this 151, and now it just seems like it needs time. So I'd say the longer it stays above 160, the better the chance we get another nice little consolidation period where we could trade it through prior highs. And you know what? This one could be at, what is that? 200 at a theater near you. Just watch these trends. As long as it stays strong, do not fight it.
Okay, let's do some quick hits here and check in on gold and silver. We've talked about the move in gold. Gold did hold up well yesterday, but you've said that you think this move could be almost over.
Yes, long in the tooth. And you don't want to have long teeth. You know, for me, I have the little fangs as a Red Dog. But with that said, times to buy, times to sell, times to not really be that involved. And with gold, you know, we talked about this potential reversal here when it had that, you know, counter trend blood in the street trade right there when it went through 115.65. Another nice little tradable pattern was right here when it broke this downtrend. Here was even another flag. So right here, it kind of continue. Yes. Do you have to be that involved with it? I don't think so. You do look here, it is a little weaker today. It's opening lower. So gold tends to like to fill its gap. So if it could stay below this 160, 136.52, you know, why not? At least if you're going to wait to buy a dip, at least wait to maybe 134.89, which comes in at the 8-day, which has been following, you know, since this most recent break. So that's what I would do with gold. And real quickly, because I don't want to spend too much time here, silver, it too, very nice trade. We talked about 18-ish being a better buy than a sell, okay, and then this actually confirmed it right here. Then you had a nice buyable descending channel there. And here we are. Again, I think what we say yesterday that I thought anywhere between 24 and 25 would be a better sell than a buy. I still think that it needs time. Let at least the 8-day catch up.
All right, well, let's also go check in on the 2013 theme of going short TLT and long TBT. The TLT did break above the downward resistance that had been in place, but it gave back some of its gains yesterday. So how's that playing into the theme that we've had?
Well, I would say it didn't break its downtrend. It broke that lower pivot to the upside, which is a little bit different. So if you look at the chart here, I'll show you. Here's that lower pivot right there. It did break above it, which was 103. So if someone was looking to cover some shorts and maybe look for a tactical bounce, here it was. But then this is the most recent downtrend where it somewhat started to fail. I would say, if this downtrend was to stay so pent up and intact, you'd want to see this just quickly come back to the lows. But if for some reason the TLTs do stay above, just say 104.33 and continues to go sideways and show some commitment to this move off the lows, perhaps the retracement goes further. So I would just be on the lookout for that. Just don't blindly short it because that trade's been working for a long time, ever since the highs here 124. But first time resistance, now we see what happens here. You flip that over with the TBTs. We talked about this upper flag that wound up resolving itself to the downside here around 81. If you got out then, great, you didn't care about this move. What do you see here now? You see the 21-day moving average, which has been holding all the way since May. It is actually now below it. So what you want to do is you want to see how many days does it stay below it. If it stays below it for another, I would say 2 sessions or so and turns down, then you could see, a little bit of a different character here. Ultimately, I think you can keep it in the drawer that rates should be higher coming into, next year. But at this point, the chorus got really loud for 3% on the 10-year, and that's usually a sell signal, which it was. And now, let's see what it does here at the 50-day. So ultimately, if you sold here, maybe you try some versus slow. If you have a tier 1 in the drawer, I would just keep it at tier 1, and then we'll look to see if it's worthy of adding to that.
Well, today we'll have the second estimate of last quarter's GDP. Of course, we have lots of headlines about Syria. We've got Jobs Friday. There's a lot of stuff out there. So what should traders keep in mind today and heading into Jobs Friday tomorrow?
I would just keep it light. I would just keep it light because, again, we could, if you have short in the brain, because everyone's saying 1987 or 2008, short in the brain might not continue until next week. So we might get this tactical bounce in between. If you say yesterday was the low, I think not enough data, but enough tactical strategies to be long from yesterday or whatnot, maybe today into that gap and continue to make cash flow. As far as Jobs Friday, I believe it's next Friday. I wrote it down wrong, so it's not tomorrow. It's probably next Friday. With the holidays, sometimes I get a little screwed up with that. But anyway, all in all, it's been a great summer. Okay, you had a really good July, which happened to be up 5%, which I believe was tradable. Earnings season, a lot of have and have-nots, great action. I think with the option strategies we used on the VTF, a lot of guys were happy about it. Then even the tradable move to the downside between the head and shoulders top that triggered that, went with some spider puts on and actually made money to the short side, and then playing the bounce into Monday. Guys were pleasantly rewarded by using tactics and being around over the summer. So if that's you, I would say take this weekend, enjoy yourself, look back, reflect on things you did well, and perhaps try and do them better. Things you did poorly, work on those. If you didn't perform well this summer, don't, I would say, focus on it and beat yourself up all weekend long. But figure out what you did wrong. There's still 4 months left of the year, and typically October through Christmas happen to be one of my favorite times to trade. So don't be put too much in a hole, or don't be too negative where you can't come out of it, and make some money in the last quarter, because the last quarter, in my opinion, is typically where traders could make their year.
All right, there you go. That's your morning call. Have a great day. Happy trading.